What's happening, everybody? We're back with the Flow Show. Steve Straza, how you doing, my friend?
Good. How are you?
I am well, man. Good to see you back at the home office. I see you've redecorated a little bit. That's good. You got some new light.
Yep.
It's a whole new Straza in 2025. I like it.
New office, new house, new Straza, new year, but the same old messy market, Sean. The same old messy market, you know?
Well, I'm happy to see that you have avoided the internet virus that's been going around that infected both me and JC last week. I'm still dealing with it a little bit, but at least I'm functional now. I could walk on my own 2 feet. I got a lot of energy. I just my voice is still a little scratchy, a little phlegmy. So if I do a little during the episode, I apologize.
You sound better this week than last week, so the trend is in your favor. And I gotta say, shout out new hair. Love the new hairstyle.
Oh, thanks, man. Yeah.
Really good stuff.
I got it was time for something new as well. I guess I'm doing something new in 2025. I didn't even think of it that way. That wasn't the intention, but
Yeah,
there you go.
like that.
All right. Well, hey, this is the Flow Show. This is our unscripted show. We have no idea what we're going to talk about, or at least I don't have any idea what we're going to talk about. Steve likes
Yeah.
to bring up some charts that are on his mind, some setups that has got his mind spinning, and we like to look into see if there's some options trades we could do with these ideas. So, with that said, Straz, I know before we went live, we were kind of belly aching about this market, and I'm with you, by the way. I feel like nothing in my portfolio is working that well. I got a couple, little pockets here of strength that things are doing well for me, but like overall, I feel like nothing's working. What are you feeling?
It's been a tough couple of weeks now, 4 or 5 weeks, where sure breakdowns are failing, but the breakouts are also failing, right? So getting chopped up on just about everything we put on. I think I was just joking with you off air that like the the only good winning trade we've been in lately is crude oil. So that's information right there. And if we just flip through a couple charts, uh, like we can illustrate the environment. This is the US dollar index, Dixie. We've talked about this range for so long, years now, right? We said if it
Yeah.
resolves lower, that's going to be bullish risk asset. But if it resolves higher, that's going to be bearish for risk assets. And for now, Dixie has resolved this range higher. That is putting pressure on risk assets. The 10-year yield, interest rates. Look at them cruising. New 52-week highs, almost fresh cycle highs for the 10-year yield, putting pressure on risk assets. Then you go and you look at some of these charts. This is the Russell 2000. Actually, let's look at the S&P 600, right? These breakouts are failing, and I think that's going to be the case. See, you're going to break out to new all-time highs, and then bang, right back in the box. Dow Transports, same thing. Breakout to new all-time highs, and then bang, right back in the box, right? I think these failed breakouts are going to be valid failed breakouts as long as that chart of the dollar and interest rates keep moving up and to the right. So this is
So
the tape we're in.
the question I have, Straza, is there seems to be a common date when
Yeah.
all of these things that you just cycled through all seem to have turned. Was that the Federal Reserve? Now that we have some distance from the Federal Reserve meeting, I mean, is it becoming clear now that something has changed in the wind coming out of that Federal Reserve meeting?
I guess we're makes sense because we are in one of those markets right now where every little piece of economic data that's released, the market's just hanging on to it for some sort of a read on what the Fed is going to do. Really, some of my least favorite environments. But
Well,
yeah,
I'm just guessing by looking at that chart. Does that correspond with that last FOMC meeting or not?
I don't know. It was late November, I think. I'm not sure, Sean. I
Yeah, I
don't
don't
have
remember either.
it. Not sure.
I mean, it's been at least 3 weeks now.
Mhm. I can Google it.
Yeah. I mean, we all like to on the days when the Federal Reserve does make their announcements, we all like to become instant pundits and know immediately that day that everything has totally changed. But sometimes you need 2, 3 weeks of distance from it to see what has transpired before it really reveals itself. And it seems like maybe that was the catalyst that has changed things. Maybe the language they used, um, the
Uh,
expectations going forward. I don't know.
yeah, it was the middle of December, Sean. So pretty much December 17th, 18th, that's when you got these failed breakouts.
Yeah.
Really, you started to see a lot of industry groups giving back all of their post-election gains and then some, right? Filling that, here's the post-election gap, right? So filled it and then keep falling. We have these bear coils and so many things right now. This is kind of like the pattern I'm hoping we could find a trade around, right? But this is everywhere right now, Sean, right? We have some sort of a peak, right? A rollover, a tactical top into a little bear flag, right? A little bearish coil. And then it looked on Friday as these were all resolving lower, but then big save yesterday, and the market is trying. It's 1:15 Tuesday afternoon. The market is trying to put in a really, really, really solid follow through day today, but we got to see the way they close. Because if you look at something like tech, it's already given it up, right? So here's tech, we turned red. Same with NASDAQ 100. And then if you look at these cyclical groups, which I think are really interesting right now, industrials holding, financials holding, energy looking good, so strange to say that, and materials holding. So
Yeah. Well, last week I put a bearish trade on the books, just to kind of balance out my portfolio a little bit. So far, it's not working. It's not
what was it?
hurting me, but it's not working. It's not doing what
What
I
did you
want it
get
to do
short
yet.
again? What was the name?
Textron,
DXCM?
TXT.
Textron.
Yeah. So I mean, it's not hurting me yet, but
That's that pattern.
it's not trading in the direction I want it to. I'm short a bear call spread. So I mean, as long as it doesn't go up too much, I'm okay. But I would like
Well,
it to follow through on the downside.
Sean, this is such a great illustration of the point that we're making, right? This is a messy market. So what'd you do? You tried to get short a laggard stock that's already been falling, making lower highs, lower lows all of last year. It's in this bearish short-term continuation pattern. We're talking about how the tape's been kind of dominated by bears lately, but even the short-term bear coil in a laggard fails and is reversing higher. That's the market we're in.
You know what I think, Straza,
Hmm.
is that obviously we're clearly frustrated with our longs. This Textron is an example of being frustrated with the shorts.
Let's bet on
Maybe we need to
sideways.
find something in a range. Let's put a little delta neutral schmingy on. What do you think?
I like that. I think that is the most prudent course of action right now in terms of option strategies to be employing.
Yeah.
Mess market, that's a messy strategy. That's for the messy stuff. Let's do it. You have
Yeah,
anything?
you got something, big cap name. I mean, I'm looking at my ETF list here, sort of ranked by volatility, just to give us maybe a place to start fishing. XLF is near the top of the list. No surprise, we're heading into earnings season, right?
Yep.
But is there a big bank maybe that we feel pretty comfortable it's stuck in a range and we're not going to get smoked on earnings? That might be a good play there.
Hmm. I think you want to stay away from them. They all have earnings coming up. They all have earnings coming up.
Yeah.
So I think something like that you could do at the index level, but I would just stay away from banks. Banks is one of those groups I think you're going to get up or down from. I think you're going to get a direction from banks. You also have the bond market situation, right? Interest rates have been going higher like every single day for months now. If that trend ends and they come off, I think you can get a big move from banks. I would go somewhere.
How about materials?
I think
XLB is right below XLF on my list.
I think they're gearing up for a big counter trend move, but it's still really messy here.
Yeah.
So I think
Well, Messi's good, right?
yeah, so I think XLB, it's a wide range, but let's look. So here we go. The upper bound, I think you got to take note of the prior cycle highs. So let's call that like 92. And then you have some sort of a range here, been in place for the past few years, and we scoop beneath it, and now we're trying to repair it and get back into that old range. So let's just draw it here. So here we go. I like this. This kind of setup here. If I could play devil's advocate and say maybe why materials are not great for this, it's because you do have the scoop and score setup here, right? So let's just talk about what could happen on a pattern like this. We got what looked like a breakdown, right? New man, almost new 52-week lows in the XLB just last week. Chopping, coiling. This bearish pattern, this bearish coil fails, resolves higher. Now you have these range lows, right, which is also the range highs from 2023, right? I think if we blast back into this box above 86, you get a fast move up to low 90s. So I think we could play that range. But I do think you get some upside from here if this is a valid scoop.
What are the do you know offhand like the largest market caps in this space? Like maybe we should
Yeah.
look at an individual chart or individual
Here's
stock
Lind.
just to see if there's any good info there.
Here's Lind. This one's great. Big wide range. I like this a lot more. So this is the largest in XLB. Look at that, Sean. Oh, baby. That's
Yeah.
nice.
And its options are liquid enough, I think.
Is it German? This one, this is an ADR. This is some European stuff here. But look, from call it 410 back to 480, 20% range, but still.
What else we got? The more I look into these options, if we're going to put a four-legged option spread on here, I don't like that there's not a whole lot of volume and open interest here.
How about Freeport, Sean? I mean, this is a range within a range within a range within a range. Like, look at this thing. What a sloppy slop job this is.
Yeah. Okay, now we're talking. Now, there's plenty of liquidity there.
And these stock, I mean, these copper stocks, the metals and mining, sure, they're having a couple good days out here. I get it. But I wouldn't get too excited. These stocks have just been so messy for so long.
Well, let's see something here. I'm going to mess around with some strikes. And I'm going to be really conservative. So, like, meaning I'm going to put like a pretty wide look. I mean, I'm going to look at what a wide iron condor would be here. And I'm thinking iron condor because I think I want to define my risk, especially with a stock versus an index. I'd rather define my risk. Let's see.
Yeah, I mean,
So if we did an iron condor in February and we sold the 45 calls and the 35 puts
mhm.
and then protected $5 away, we can get about 69 cents for that spread right now. It doesn't sound like a lot, but I mean, it feels like it gives us a wide range, right? I mean, 35, what did I say? 35 and 45?
Yeah,
How do you feel about that range?
yeah, I like those numbers. Because 45, that's the pivot high from December. Yeah, that's great.
I mean, it's one of these trades that, yeah, you're only getting 69 cents credit, but that means you're risking 430 per unit, right? If you did one contract,
Yeah,
you'd be risking $430. Now, you're risking $430 to make 69 or 70, but your odds of success are incredibly high in this situation. Not incredibly, I shouldn't use that word, but I mean, you have, according to my platform here, let me, Gene, if you want to pop my thing up there, you can. I know we don't like to show my screen too much because it's ugly, but
it's a nice, big, beautiful range.
yeah, let's do something here real quick. We're gonna, if Gene is showing my screen here, you'll notice that as I'm stretching out these lines, let me get this out of here.
What are you doing there?
I'm doing some math, some black magic here.
Okay.
So notice here at the top of my screen here, it says 64.72%. So what that means is at expiration on February 21st, there's a 64% chance that FCX will close between this level here, which is our short strike, our short puts at 35 and our short calls at 45. It's just math. It's not a prediction. It just says that there's a nearly 65% chance that we're going to close somewhere in that range. Okay. That's high probability.
Yeah.
If we widen it even more to like our actual break even points where we actually start losing on expiration day, our odds of success increase to 71%. So yeah, we're only collecting 69 cents to put this spread on, but we have a high degree of success. So maybe you do it a little bit bigger. Maybe you do, a 2-lot or a 3-lot. I mean, I don't know. Everyone's got different risk parameters as far as their position sizing, but you just size it according to what you're willing to risk. If you're willing to lose, let's say $1,000, then maybe you do a 2-lot or a 3-lot. Okay. If you're willing to risk $5,000, maybe you do 15-lot. I don't know. You got to figure out that math, but just because we're only earning 69 cents doesn't mean it's a bad trade. It just means you got to do it bigger, right? It's kind of like buying a penny stock versus buying a, you know, a $500 stock. You just do it bigger as a penny stock and smaller as a large stock.
Yeah. So I think maybe a little bit of nuance there in terms of. So would that take up a lot of margin, Sean, doing something like this, an iron condor
So
event?
you're going to take up $500 margin per one lot because that's the risk. The most this spread could be worth if I have to buy this back in a worst case scenario, the most it'll be worth is $5. That's the difference between the long strike and the short strike on both sides. So the short strike, if we're looking at the put side, is 35. If I move over here, the long strike is 30. So the difference there is $5. So your broker will require $500 of margin per one lot. Now, the most you'll lose net is approximately 430 because you're bringing in that 70-cent credit on day one. So you're actually risking $430. That's the most you can lose per one lot.
Now,
Okay.
does it make sense to stop out of this if we move back to and through 45?
Oh, absolutely. Absolutely. I think if we break above 45, which is our short strike. I mean, we want to stop out for two reasons. One, that's our short strike, and we don't want to be holding the spread once it starts going in the money. But also, I mean that's like the upper resistance since mid-November, right? So that
So
corresponds well.
if you throw up my chart too, you have VWAP resistance coming in. So from the Q4 highs, that VWAP comes right in overhead at 45. You got that
Yeah.
shelf of little highs there, that little coil from December right there at 45. So I think that's your level. There's your line in the sand. And then just again, look at my chart. We got a sideways 200-day moving average. Stock that has been trading in this range literally since early 2021 now. We're going on 4 years stuck in this range. You see momentum in a neutral regime, hitting oversold, hitting overbought. This one just can't figure it out. I don't think there are many better vehicles to express a messy market thesis on than Freeport-McMoRan right now. So I'm proud of ourselves for finding this one.
And you know what? Just to complete the thought, you know, we talked about if it got above 45, that's above some key resistance. On the flip side, if we got below 35 on the downside, putting our short puts in the money, I mean, that would be breaking a little bit more than a year long. That would be more than a 52-week low. So obviously, we want to be getting out of that spread if it breaks a 52-week low, because that means that's irrefutable evidence that the range is expanding. And this is a type of trade that we want to put on when we're expecting the range to hold, right? So yeah, I think I like this trade strategy. I think this is one I'm going to put on.
I'm going to do it with you. Just checking. You're also, you know what, Sean? That 35-ish level is also about the 62% retracement of the 2022 to 2024 advance. So
Nice. All right. Just to complete this, because this is complicated, Gene, bring my screen up one more time, just so we could review this. This is what the Iron Condor P&L graph looks like, and what I want to highlight are the key points here, which is where the strikes will be trading. So we'll be selling. This is an Iron Condor. We're doing this in February options. We'll be selling the 35 puts right here. We'll be selling the 45 calls right here. And then we'll be protecting the position, defining our risk, $5 away on both sides. So we'll be also purchasing the 30 puts down here and the 50 calls up here. And we're going to get, I mean, if I were to execute this trade right now, it looks like I'd get about 69, 70 cents right now. Let it cook, put that order out there, let it simmer, let it get filled. You know, don't need to rush into an exit. But that's the trade. How do we do?
let's do it, man. Let's make some chat on the chop.
I didn't see any questions come into our chat, so either we did a really fantastic job of explaining this, which I'd like to think is what we did, or the chat's not working.
And look, this might not be sexy. This might be one, you know, a more boring trade that we maybe put on, but it's the right trade for this environment. So that's it.
Right. I mean, we talk about this all the time. That's the beauty of options, is that there's in any market environment, there's always a trade we could put on that gives us good, you know, better odds of success, either better odds of success or a better chance of making a big win, right? There's always one of those trades for every market environment. It might not be our favorite. Like, I don't want to just do iron condors all day long, but when the opportunity presents itself, when the environment's right, yeah, I like to throw them in for sure.
Yeah, is it always nice when we just go like naked long calls and we look at something and we say, oh, wow, I could see how this could be 5, 10x if it goes to our target. That's great, but it's not the right course of action in most environments, right?
Right.
Most environments are for the boring trades, for stuff like this. Collect a little money in a messy market. I like it, Sean.
All right. Well, hey, this has been the Flow Show. We did a good job here today. Thanks for tuning in, everybody. We'll hopefully be back next week with more ideas. In the meantime, we'll see you. Shrez, I think it's just you on the morning show. Is that right? Tomorrow? JC's not going to
Wow.
be around?
So then it might as well be a Straza show. Let's go,
Well,
baby.
I'll be popping in tomorrow with you because
Join me.
I guess you guys are not doing a show at all on Thursday. So
No,
I'll be
cancel.
in there with you tomorrow to bring in the last half hour of the show.
That'll be great.
Bring it home.
Looking
All
forward
right,
to it.
everybody. Thanks for tuning in. Straz, a great job today. Great job, Gene, in the background, flipping screens. We'll be back next week. We'll see you next time. Take care, everyone.